DeLynn, what is the most ridiculous, silly question you've ever got?
You want fries with that? Duh.
No, I'm talking mortgage related.
Oh.
Hello, everybody. My name is Barry Horvath, and this is Moving Forward TV with your local market update.
And I am DeLynn Gaston. Thank you so much for joining us. Yes, I have a French fry addiction.
Is that what that was all about?
Yes. Dumbest question. You want fries? Of course I do.
No, that was just a silly question. Nobody
I
really,
know.
our viewers don't care about.
My French fry addiction?
No, they really don't. They want to know.
You're going to ask me
I'm going to tell you.
the dumbest question I've ever heard.
I was talking mortgage related. Our audience wants to know about the industry.
Know.
They don't care about super size and your fries. And anyway, what is your favorite?
Or do you want cream and sugar in your coffee?
Yeah. No, cream.
Do you want
too sweet?
I'm on my way to the office. Do you want a cup of coffee, DeLynn?
Yes. There
yes.
You go. That could be a silly question. What are your favorite French fries anyway?
McDonald's.
Really?
Yeah.
What is it about
Hands
McDonald's
down.
French
I
fries?
don't know.
They have the worst burgers in the world.
I don't like anything at McDonald's other than like their
I think it's the oil they use.
Actually, and Wendy's. I like Wendy's. Wendy's is good as well. I do not like Burger King, and I do not like Checkers or anybody else. Yeah, just really Wendy's and McDonald's. Those are the only two.
This is important
as far as fast food. Now, as far as like other ones, Five Guys, awesome French fries.
Those are fresh potatoes.
The Stadium right across the street from us, really good French fries.
Ooh, there's a plug for one of our local businesses. All right, so let's talk about real frequently asked questions in the industry.
All right.
Forget about French fries.
I know, nobody asks me, what kind of French fries do you want, DeLynn?
I think they
But we do get a lot of other questions.
Yes, we do. We get a lot of good ones, and we do get a lot of silly ones, which we being in the industry so long might think it's silly, but for our first-time home buyers, for a lot of realtors, and I learn stuff every day. Still.
Yes, I know.
Because guidelines change every day.
So one of the most important questions that we do get that people do need to know is about closing costs and how much can be paid. And like the top of the list of the closing cost question I get is when I say, if it's 3% or 6% or whatever program, depends on the program, they say, is that on the loan size or is that on the purchase price? So the first answer is, it's always on the purchase price.
Yes, always on the purchase price.
Always on the purchase price.
And when we talk about, because closing costs can be thousands and thousands of dollars, and your buyer or you being a home buyer may not have enough to bring to the table to make a transaction happen. So it's important you understand how much, depending on which loan program, can the seller pay on your behalf, meaning we're not financing it into the loan per se. We can't call it that, but essentially in your offer, you are putting in a certain dollar amount to allow you to get into your home. And you know what? I had a realtor ask me, well, why would you want to do that? Well, number one, it's not just because the buyer doesn't have enough money. It actually can change which loan program they go in, and it can actually make their rate better by maybe putting a little bit more money down and having the seller pay closing costs. So it can, because pricing is based on loan to value. We know that. We know that.
Yep.
But most people don't know that.
Right.
If you're putting a little more money down, when you see these cream puff rates, those rates are based on a certain amount down. So it can actually change which loan category you're going to be in.
Right.
So
we figured we would just do a real quick recap of it so that you guys kind of have a little bit of an understanding of how much it is. So we're going to start first with the easiest one is FHA.
FHA is super simple.
Doesn't make a difference how much you put down. The minimum down payment, of course, for FHA is 3.5%, but you can put a lot more down. FHA is a lot more lenient on things like that. And closing costs is one of the things they're more lenient on. They will allow up to 6%. Now, that being said, I do want to stress here.
This is your favorite part of the show.
I do want to stress here, do not tell buyers or sellers closing costs are 6%.
They're not.
Because there's a big difference between
Can that be the dumbest question ever?
Yes. There is a big difference between a $100,000 purchase price of a house, 6%, and a $200,000 or a $300,000. Your closing costs are not a percentage of the purchase price.
That's so important.
What the seller concessions is absolutely a percentage. So the maximum FHA is 6%. Doesn't mean that it's going to, so if, it comes at, your 6% comes out to $10,000. Well, if the person's closing costs are only $6,000, that doesn't mean they're getting the whole $10,000. So don't leave money on the table for your buyers or for your sellers or anything. Yeah. You definitely want to make sure that you have an accurate number. Don't just automatically put 6%, let's go with that.
You know what? It's good you say that because most of your closing costs in a transaction are fixed. They're flat rate.
Yes, they are.
Certain fees are percentage, like your title insurance, your doc stamps, intangible tax, they're a percentage of the loan size or the purchase price per se. But the flat fees, like appraisal is always going to be a flat fee. Certain underwriting fees are a flat fee. Settlement fee from the title companies are a flat fee. So the percentage means nothing. So just leave that out. Forget that. Like you said, a $300,000 deal using 6% on FHA, it's not $18,000 to close a loan.
No.
Now, to be creative, the one thing you can do if there's money left on the table is you could actually buy down a rate with that extra money and make the closing costs higher. So you could put your buyer into a lower interest rate by doing that. You could potentially help them qualify for more house by doing that because their payment will be lower. But that's a whole nother show, right?
Right.
So
the bottom line is there's a lot that goes into it. So don't just automatically assume things and don't just automatically throw out a figure or something. Definitely call your loan officer and ask for a little guidance on that if you're not sure. We are more than happy, and I've guided many, 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 many realtors at the early stages when they're starting a contract and they're like, okay, well, what should I put here?
You know what? 6% on FHA includes closing costs and prepaids. So even on a $200,000 house, could it be 6%? Yeah, it could be. Because remember, prepaids are your insurance and taxes. And this time of year in Florida, tax bill being due in November, there's a big, we have to have enough in that escrow account for this November. And a lot of people are, you skip a payment with your mortgage. People don't take that into consideration because right now is, you're getting close to that November where we're going to almost need all that tax money ready. And then your insurance, you're going to need a whole year of insurance premium.
And
right
if it's in a flood zone,
you're going to need a whole
year of flood insurance and homeowners insurance. That right there could be over $2,000.
Plus the amount of reserves ahead of time. So typically it's 2 months. On flood, it may be 1 month. But those prepaids can add up. So
I always like to say, you know what, rough numbers. Just plan on your rough
speak
numbers. Plan on your hard costs.
What will you do for a French fry? Roll over. Sorry. Just had to throw that
plan
in.
On your hard costs being somewhere around, $4,000, give or take. And your escrows.
Hey, you charged me $4,200. Why were mine more?
So I say give or take. I always say $3,500 to $4,500 or $3,500 to $5,500, depending upon what the loan size is.
And the title company fees.
And the title company fees and things like that.
Yep.
But on your escrows, always plan on at least, a couple $1,000s. It's always going to be at least a couple $1,000s between the interest, the taxes, and the insurance on the property.
All right, so FHA, 6%.
6%.
Period. All right, now
Doesn't mean you're going to get the whole 6%, so make sure you're careful with
all
that.
right, now that's your FHA buyer. What about conventional? Let's
Conventional
talk about that.
depends upon the down payment.
Yes,
so,
it does.
So if they
And
are
and primary or investment.
yes, it does. So we're going to start at the top. Usually, if they're putting a minimum down payment down, anything less than 10%, that means if they're putting 3% down or 5% down or something like that, anything less than 10%, the seller's maximum contribution is only 3%. And let me say one other thing, Barry, while we're here. When we say maximum contribution, it doesn't necessarily just come from the seller. So if the realtor is giving, and this happens,
Yes.
the realtor is giving funds back, perhaps part of their commission or something, that is part of the maximum contribution. We call it seller contribution because that's
Right.
the most, but it's any contribution. So if the lender is giving a contribution, if the realtor is giving a contribution, or the seller is giving a contribution, they are maxed less than 10% down, then the maximum on conventional is 3%.
And then if we go from 75% to 90%,
Right.
it goes up. You can allow more. And again, could be used to pay prepaids, closing costs. What does it go to then? 6?
6%. 6%.
from-
If they're putting
so
20% down, 25% down.
Anything up to more than 10% down.
Right.
It's 6% on conventional.
That the seller can.
And it gets even better. And I have not seen anybody do it, but if you're putting more than 25% down,
And mind you, that means even 26% down.
yeah, you can actually get up to 9%.
Seller contribution.
Yeah, so
which is really helpful if it's a smaller property. The
Yes.
more you can
Right.
get in seller contribution or any contribution, lender or realtor, like I said, the better. So
and I've seen it where seller contributions, again, less money, a buyer has a certain amount of money in a budget they want to put down, they can actually get a better interest rate by using the money for down payment as opposed to closing costs.
now the seller cannot, or no one can contribute towards that down payment. But what we're talking about there is instead of the seller getting less, the seller pay more in contribution.
It's the same
instead of-
money.
It's the same money. So instead of negotiating the price down some, don't negotiate the price down as much, negotiate higher closing costs so that your buyer can get a better interest rate.
Yeah.
Does that make sense?
Yeah.
I know it's a
clear as
little
mud.
complicated, but
It's clear as mud. More money down means better rate for your buyer. Paying it towards closing costs just makes sense in a lot of times, but we can help you do that. We're here. All right. What about investment property? You didn't say.
Investment property.
On
That's true.
conventional, it's capped at 2% no matter
2%.
what. You can put 50% down, 25%, 10%. Well, you can't do 10% on that. 15% down minimum
Minimum
on
down
investment property.
payment on an investment property is
But
15.
it's 2% seller contributions.
Right.
That's just the way it is. And more than, all the other loan programs we talk about, investment, property, conventional is your only option, really.
Right.
You can't do USDA, VA, FHA, any of those on
They
investment
don't do
property.
investment.
They don't
so.
do it. But keep that in mind. All right, let's move on to your
Okay.
favorite, because this one's a
So
really
this is-
complicated one.
this is the one that
part
everybody has
where
the most
all of you need to
questions.
take out your notepads and write
Yes.
this down.
Definitely.
Because-
Jot this down.
No, even if you don't write it down, you can call us or call a lender who knows these things.
So I hear this a lot, and I get calls from a lot of you out there, and I appreciate the phone calls. I love, 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 love answering this question for people.
Because you
VA.
love education.
VA. And I get some realtors calling me saying, hey, I'm the listing agent on this, and a contract just came, and they said the maximum seller contribution is 4%. That is not correct. Everybody thinks out there,
You know what's so
VA,
funny?
the maximum
If
contribution
you Google
is
it,
4%. It's not.
If you Google it and get the information online, you'll get 5 different answers.
Depending upon, who you're,
Yeah, who you're Googling.
well, the things that come up in the Google feed, which one are you going to read? Because
Right.
a lot of those are from lenders, and they're wrong.
Well, they may not be wrong for that particular lender.
Right. Maybe they have their
They have their
overlays.
own little overlays. Because remember, the VA is just guaranteeing the loan. That's really all they do. The lender has their own, they're lending their money. The VA is just insuring it and guaranteeing it and collecting their funding fee.
That's right. So what is the real answer then?
So the real answer is not 4%. It's actually, but it is 4%. So here's where it gets really complicated. And this is when you throw it on me to answer.
Let's see how good he does.
Okay.
And then I'll interpret.
All right. So, because I have to read from my notes here, because it's up to 4% of the sale price, but the 4% rule only applies to certain items. So, prepayment of property taxes and insurance escrows. The only thing, to keep it simple, that the 4% does not apply to are the hard loan costs, period.
And guess what? The seller can pay those. The seller can pay those. The realtor can pay those. Those can be contributions as well.
But those are unlimited.
It says normal, here what VA's guidelines say, normal and customary closing fees. So things like origination fee or the appraisal fee,
right?
The title company fees, the title search fee, the title insurance fee. All of those things, absolutely, underwriting fees, processing fees, absolutely, positively, and our doc stamps and intangible tax,
Right.
all of that stuff can be paid for because those are normal, customary for the state of Florida closing fees. Those can be paid for in contributions. In addition to that, they can pay up to 4% over and above that, 4% more towards the veterans funding fee, towards your escrows, your taxes, your insurance, things like that. In addition, which I thought was
pretty... there's more!
There's more! Which I thought was pretty cool.
So don't forget, order this before midnight tomorrow. Oh, is it tonight?
What else falls under that 4% is, let's say the buyer had some past collection or judgments or debts or something, believe it or not, that can be paid for through the 4% contribution as well.
So if you have a buyer that's not going to be able to get the loan because they have this debt that is required to be paid off, the seller can actually pay it for them at closing.
Or the realtor.
Yeah.
So the contribution, that 4% contribution, actually, and the funding fee, for what it's worth, funding fees is, and we probably should say this, one of the other things we get a lot.
When she says we probably should say this, that means she's going to say it.
Yes. Veterans do pay closing costs.
Yes, that's a good question.
That is a big one. I get that question from a lot of realtors.
Veterans
call me and say, too, hey, I was just told by this other realtor that veterans don't pay any closing costs.
Not true.
But
here's a beautiful thing, though, about the VA loan, because we're talking about closing costs. If you structure it properly, the veteran could essentially get into a house with no money down, with the seller paying closing costs that do exist.
With no money. It is, with like zero into the transaction.
And they're going to get a great rate.
Yes. VA, for what it's worth, is the best program out there. Bar none, VA is the best program out there.
But it must be used for primary residence.
Yes. So. Primary residents only.
So,
and they are actually a little pickier on who actually can be on the loan.
Pickier.
Who actually can be on the loan.
I prefer more
picky. Talk to us about those things.
More picky.
Okay.
More picky. All right. So if you have questions about closing costs, seller contributions, any of that, reach out to us. We're happy to help. So
I know we took a lot of time on that one because that is absolutely the number one question that we get.
And we're still going to get it because most of you are going to say, yeah, Barry and DeLynn talked about this on the show, but I don't remember what they say. That's okay.
But and you know what? And that's okay. Call us. We have no problem. We want to make sure we're trying to help you sell houses, so we want to make sure that you are writing up contracts properly, and we don't want to leave any money on the table for putting too much in when we didn't need that kind of a thing. So we want to make sure we do it right with you.
Okay, let's move on now. Let's talk about some
other questions.
Other frequently asked questions. We promise we're just going to touch on these. We're not going to beat you up with them and tell you, but these are just quick questions and answers that keep coming in.
My general FAQs go.
Yeah, so what's the number one? And we have a lot of notes because we get these everyone.
Can we close in a trust? The answer is yes.
Yeah, there
are a lot of parameters that have to be met with that, including we need all the trust documents. And then we get people who will give us one page of it. Not going to cut it. We do need all the trust documents and things like that. And there's certain kinds of trusts that you can close in and certain kind that you cannot close in. So it's an open-end question. The bottom line is the answer is
possible.
Yes.
And if not, it is possible to move it out of the trust
which we've done many, many, many times for people.
and then people put it back in the trust after closing
Right.
to meet the lending requirements. So, but it is possible to close in the trust. Love that question. All right. How about a POA, power of attorney? Can the buyer do a POA? Yes, but you cannot just all of a sudden the day before closing say, they're going to be out of town.
Yeah.
I want to do a POA now. And you cannot. You need to. It takes approval. There's certain parameters and guidelines.
It takes approval from both the lender and the title company, because the title company has to make sure that what they're doing, their title insurer is going to insure it. And from the lending standpoint, we have to make sure that the POA is meeting Fannie Mae or Freddie Mac guidelines and such. And they are specific. And that's the first thing. It has to be what's called a specific power of attorney. Specific. It cannot be a general of like, oh, well, we already signed a power of attorney 2 years ago.
Yeah.
That one is not going to cut
Nope.
it. Even if it says in there to include all real estate, that is not sufficient. It has to be specific to this transaction only.
All right. Next question. Can a bond loan and down payment assistance be done at the same time?
Yes.
Yeah.
The answer to that is yes as well. Providing, now there are some lenders out there who do have some overlays and don't allow things like that, but absolutely, as long as all guidelines meet, the debt ratio meets, the credit meets, all of that stuff, yes, it can be done in conjunction.
Okay. I don't, what about citizenship? We have that come up a lot. U.S. citizens, non-U.S. citizens, are they eligible for financing?
Yes. Actually, they are. So it again, and because we have a lot of people who come down from Canada and they buy homes down here, their winter home.
Right, and they're coming here for hockey, which isn't happening.
Yeah, I know.
In front of a live audience, anyway.
But yes, so there. Now they
Can
are
we do
not
a show on that.
About hockey.
Yeah, no, about how we have no sports events live.
Sure, I know. You really do. I know. He's in a funk
You have no
lately.
idea. Ask DeLynn. I'm a little grumpy.
He's a lot grumpy.
Little depression
and
setting in.
Maybe that's why. Maybe it's because he's like a huge sports. I mean, if the ball rolls or putts or bounces, he's all over it.
Yeah, the NFL just announced that the first game over in London is going to be played to an empty stadium. That's just weird.
It's just sad, huh?
It is sad.
I know.
You know what the hit is to the NFL if they don't play in front of people, fans? $5 billion.
Wow.
That's the impact.
Where does the $5 billion? Is the price of the tickets?
It's ticket sales. It's
hot dog
parking.
sales.
It's those
parking.
It's those $10 hot dogs that you love and enjoy. Yeah, $5 billion impact. So COVID is, yeah, it's scary. I know, that has nothing to do with lending, but I love talking about it.
See, we went to sports. Then that's it. We lose him. We go to sports and we lose him.
Hey, we're going to weather next, so don't worry.
All right. So the answer was on non-resident aliens. Yes, you can. So we can follow all, if you have a green card, we can follow all normal underwriting guidelines, normal programs. If you don't, like the temporary, sometimes the Canadians, it's just temporary. They don't have a green card. They have a visa or things like that. If you have a visa and it expires in a year, that's going to be a problem, obviously, because we're giving you a 30-year loan and you can only stay in the country for 1 year. That's a problem.
That could be a problem.
So it definitely depends. So the answer is yes, with some caveats that
don't say no to those people. See what their options are. There are definitely options out there. Okay, here's, you know what? This one comes up almost every week because I think we're far enough past the last crash.
Right.
I think we're in a new crash now, honestly. It's a little different.
Yep.
We're in a slowdown. But how long do you have to wait after bankruptcy, deed in lieu, short sale, foreclosure?
Right.
And you know what? It depends. It really does. But a simple answer is 3 to 7 years typically. However, we've learned that even VA will allow it if you had a Chapter
And-
13 immediately.
And keep in mind, it's different. So a Chapter 7 is different from a Chapter 13, the
Yeah.
waiting periods. A short sale is different from a deed in lieu of foreclosure
Yes.
and a foreclosure. So it depends on what type of incident we're talking about. And then under certain programs, depends on the program, because under certain programs, for example, if they had a bankruptcy and included in that bankruptcy was a foreclosure,
Yeah, it changes the whole guideline.
on
time.
conventional, it changes your timeline. On FHA, it does not. So, it really depends.
And the other part of it is, when did that deed transfer? That's a critical, people are like, oh, I left that house in 2009. Well, the bank held on to
Sadly.
it for 4 years before they ever transferred it out of your name.
And
it was
that
still
has
theirs.
happened. Sadly, Bank of America, and I am sorry to say that, but they absolutely were one of the biggest ones. They had tons of foreclosures.
Yeah.
They couldn't keep up with them. The courts were just overwhelmed with all the foreclosures and things that were going on.
They sat.
So sadly, they sat for 2, 3, 4, in some cases 5 years. So although the person kind of walked away from it, in 2010, let's say, the foreclosure didn't actually happen until 2015. And guess what? That's the date we have to go off of.
All right.
It's sad. It hurts a lot of people from buying new houses. Just had somebody it happened to very recently.
Yep.
So
all right, let's talk about dates now.
dates.
Yeah, so enough questions?
Yes, enough questions.
I think we filled their head with a lot of great, useful information.
The only one we didn't touch on was the COVID question. The
Right.
bottom line is, don't do forbearance.
There you go. There's the easy answer.
It was
Yeah,
more
because
of,
when you do a forbearance, it does change a lot.
absolutely affects a lot
Even
of different
though
things.
the CARES Act says, yeah, you can do this and yada, yada.
And we are happy to talk to you about it,
Yeah,
go over it with you.
Just be careful.
Yeah, so call us. If you have any questions about forbearance and what's going on with COVID, just call us.
All right, July 14th is our next Lunch and Learn.
Yay!
Looks like it's going to be done via Zoom.
Hopefully the last Zoom one.
Let's hope.
I'm
Let's
really
hope we can
hoping.
get back together.
I miss my lentil soup from Carrabba's. I don't know about the rest of you.
No, it's so sad, actually.
I know.
Yeah, we're having trouble getting enough seating available together because we're trying to be responsible in our community.
We want to keep everyone safe.
Yeah,
And
we do.
Carrabba's wants to keep everyone safe.
Yeah, so we'll keep you posted, but it is via Zoom. Find it on Facebook, LinkedIn. You can find the links. Anybody's welcome to join us. And we always have great speakers and subject matters, and they're well attended. So they've been good.
They've been very, very good.
Yeah.
And if you have any questions about the past ones, reach out to us because we can certainly get you in touch with the speaker and such. We
Yeah.
had some really good people on, like
We
you
have.
said, who would be more than willing to answer some
Yeah.
questions for them.
All right, so don't forget to share our show, like it, get it out there. We're
We
all over
appreciate-
social media.
We appreciate you guys watching. We are Today and Every Day.
Moving forward.
See you next week. Bye-bye.
Have a great week, everybody.